Welcome back to Market Day Reports. I'm Scott Shelley, otherwise known as the Cow Guy. I'll try to smile a little bit, but it's been a bad day if you're a producer. It's been a rough one. Let's look at that corn market. We've had those on today talk about what the options have been trading, and it seems to be a couple cents lower. So that's the good news, right? If we opened up again today, tomorrow it would be 2 to 3 cents lower. So this isn't a wholesale sell-off, and that doesn't surprise me actually going into another USDA report where we don't have a ton of expectations. However, you don't want to get too overboard there. So again, limit down across the board, puts D's corn at 5.39 3/4, which is 40 cents lower. On the liner, we've got Brian Hoops from Midwest Marketing. Brian, come help me with this, right? I drew the short straw, and I had to kind of give all the bad news today. Everybody kind of dove away from me when I walked in, so I clearly have the plague. We've got also some negative prices over in the soybean complex. Walk us through what you're thinking. You must be talking to your customers. There's got to be a lot of phone calls today. What are you hearing?
Yeah, certainly a lot of people wondering what's, kind of what's happening with this market. Is this another buying opportunity like the last dips have proved to be? Yeah, quite a historic day for you to be out there on your own with limit down corn. I think, you're probably looking at least a nickel lower in the synthetics here, and probably going to see that in the overnight markets. But, certainly concerns about the crop and the crop health if we're going to be able to produce the crop that the USDA is projecting, and that's kind of what it gets down to. There's an old adage that you probably heard, it's not what you plant, it's what you grow. We just had a week ago, we had a USDA report that said we're not going to plant quite as many acres as what the trade had expected. That gave us some limit up moves and a little follow through, but now we're reacting to this rain in the 7-day forecast that looks to be pretty beneficial for a lot of the dry areas of the upper Midwest.
Yeah, I think it's important to stress that we're giving back gains, right? So we're not beating ourselves up as much and as you said with the synthetics, you say it sounds like it's more like a nickel lower. So it's not a wholesale washout, and we can't afford to really have that be the case, no pun intended, because we have to hit trend line yield. We have to start to see what we're getting, what's going to be coming out of the ground, and that's still going to be a big unknown. And as long as that's an unknown, you can't afford to be too negative this market. I think that's why you're probably going to see some bottom pickers kind of step in here and try to take advantage of that. What do you think?
Yeah, I think you're probably going to see some of that happening maybe today is Tuesday, Wednesday into Thursday, because you have that USDA report out next Monday. And that report, I think, is going to be somewhat friendly, will reflect the new acreage numbers. And that's going to tell us that we really do have to have trendline yields like you were mentioning. We don't have this cushion of an extra 4 or 5 million acres being seeded this spring. It was only about, 1.5 million or so. And a large portion of that was in the Dakotas, North and South Dakota and Minnesota, 1.2 million acres seeded in those states. And those, of course, have been very dry this year, and just one rain event won't really make that crop. They're going to need multiple rains, and that's kind of what a lot of clients have been telling us is, this crop's been hanging on or it's been looking good, but because there is no soil moisture, when this crop uses more moisture to pollinate during this month, we have to have timely rains each and every week. We're going to need to have some soaking rains because there's just nothing to draw off of on these soils.
Right, and so I think that what producers and consumers need to know, we've got the wheat board up there. That's off. Chicago wheat off another 30 cents as well in sympathy. Is that, look, as long as we've got tight supplies, this is going to be a volatile year and probably another volatile year next year, considering that we just don't have a ton of room for error. So you know what? Speaking of error, why don't you stick around and come back with us after the break when we can get a chance to talk about the proteins. Welcome back to Market Day Reports. I'm Scott Shelley, otherwise known as the Cow Guy, and we've got Brian Hoops, otherwise known as Mr. Hoops. We just got done going through that ugly grain trade, Brian. Why don't you just kind of give me a brief overview about what you see here happening, live cattle, feeder cattle, and maybe even lean hogs. And if we have a little extra time, I can touch on the outside markets. But we were in the break talking about feeders. What do you think about feeders here?
Yeah, the feeder cattle market obviously reacting to the lower corn prices, and they are going to be very sensitive to whatever the corn market does. You can see when we rallied last week, feeder cattle took a beating, putting back some premium in the market here today. concerns I think will be, from clients that are telling me that, these feeder cattle keep moving higher. It's going to be hard to justify buying them and making money. So, yeah, that's a market that's going to be very sensitive to the corn, but also sensitive to profitability of the producers. And from what we're hearing from sources this week, cash cattle market looks to be a little bit softer. We had steady to $2 higher on a dress basis in Nebraska. That seems to be where the tightest numbers are. And that quality of cattle seems to be attracting some buying interest. It's maybe in the South where the numbers should be a little bit larger. And we may see some weakness this week in the cash markets. We did last week. We saw mostly a steady market, in some instances a little bit softer money, but cutout values, until they can stabilize, I think the cash is going to be on the defensive, probably going to keep a lid on rallies. Unless you're looking farther out in the live cattle complex, you look at the December, February contracts. That's probably where most of the strength is going to come in this cattle market, as we anticipate, that we're going to have much tighter supplies in those, fourth quarters and into the first quarter of next year.
Well, I kind of left, I'm leaving the chart up on the cattle here, the feeders, because it seems to be one of the few bright spots out there, and I wanted to be the guy that talk about something that's exciting. We've got, just for the at-home listeners that can't really see the radio folk, we've got September feeders, 161 spot 32 up $1.90, and October's up $1.82, which is going to be healthy. And I can leave that up there all day long because that does give me some good news. It's been a rough morning. And as you well know, Brian, they chucked the young guy in there to talk about all the negativity because nobody else wanted to do it. So here I am. We'll try to see if we can have these markets turn around for us. Again, it was interesting to hear about where you've got that corn trading synthetically. Only about 5 cents lower so far. We might see it bleed a little bit overnight, but you know what? What we should take away from that is that this isn't a wholesale sell-off now after we've seen the limit move, and we might find our feet, and we'll see what we get from the government come next Monday. So, Brian, I really appreciate you being on with us today. I'm going to hand it over to Tammy.